Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. Welcome to the Management Accounting class with me, Indah Permata Suryani and Pak Wadi. So today's meeting, we're going to discuss still about basic management accounting concept, but for now, we're going to detail about the cost assignment. All right. So the learning objective today, after studying this chapter, you guys have to able to describe the cost assignment process and can define what is the tangible and intangible product and why they are different product cost definition, why there is a different in the product cost definition, and third one is we're going to outline the differences between functional based and activity based management accounting system. Okay, right. So we start from the cost concept. So talking about the cost concept, cost concept is actually we can classify the different cost for the different purposes. So what makes it different? Um, Things that makes it different is actually based on the purpose of the management itself. So, for example, um, this one, so different costs, different purposes. So there are classification based on behavior cost, traceability, organizational function, and controllability. And also happen to the income statement. So different report for the single users and different system for different purposes. It means that, for example, a financial accounting system was focused for the external users and a management accounting system focused for the internal users. So this is the differentiation of this one we've been discussed before, right? So I'm not gonna, explain it again to you guys. So uh, that was the things that meant to the cost concept. Okay, so I'm gonna share you the detail. Wait for a minute. All right, so this is the things that related to the cost concept. Okay, okay, things that I've taught before is actually best. So the different costs for different purposes. That means that if the management have the purposes, for example, to calculate the cost, yeah, for example, management management target, for example, um, in order to, for example, like this, management target will focus on calculating the cost, right? So that's calculate the cost. So what probably the cost classification in here, yeah. So if the management target to calculate the cost, so the cost classification patient would be based on what? Okay, so the classification related to the cost traceability, right? So related, based on the easiness to trace the cost. Yeah, so we call it cost traceability. So what sort of thing that we put on the cost traceability? So yeah, if we, hear about word traceability or tracing, actually something that we can trust. I mean, what sort of cost that will be applied to the product. So, so what is the classification based on the cost traceability? So the first one is direct cost. Okay, so direct cost, and second one is indirect costs. I'm pretty sure that everyone has been know this one before, right? Okay, cost accounting study. So what is the direct cost? The direct cost is the cost that can traceability, that can easy traceable, so easy trace to the cost object. Okay, so that was the direct cost. Okay, so I'm pretty sure that everyone will know about what is the cost before, because I didn't. I'm just gonna give a brief information about that. So the cost is actually cash or cash equivalent value that sacrifice the goods and services that is expected to bring a current or future benefits to the organization. So that was the meaning of the cost, right? So um, we also know another thing is the cost object. Yeah, so actually in management accounting system, the company have to measure and assign costs to the entities. So that was the entities that we call, that was the cost object. Okay, so the cost object is actually any item including product, customer, department, project activity, and so on. So for which costs are measured. So that was the cost object. So um, for example, there is a company uh, like probably a cafe or yeah, that having a, so they sell the cake on that store, so something like cafe. So they want to adding like another equipment on the store, for example like mini coffee cakes. Then the cost object is mini coffee cake line is, so that was the cost object. All right, so how, for example, the toy manufacturer. So the toy manufacturer wants to determine the cost of developing a new toy. So what is the cost object in there? The cost object is actually the new toy development project, right? So that was the thing that we're going to, allocate the cost on that. Okay. So yeah. So we are going back to the direct costs and indirect costs. So this is the classification. So we've been known the direct costs before, right? So direct cost is cost that can easily and accurately trace to the cost object. Okay, and indirect cost is that cannot be easily and accurately traced to the cost object. Okay, so that was the difference based on the cost traceability. Okay. Right. So if you can see the example here, so if the hospital is the cost object, so the cost of heating and cooling the hospital is a direct cost, right? So however, if the cost object is a surgical procedure performed in the hospital, then the utility cost will be indirect costs. Okay, so it cannot be easily traced to that. Okay, so so that was the classification based on the cost traceability. Now, so what would be the example? All right. So what would be the application? I mean, yeah. So how the implementation of this one? For example, okay, implementation or the application. Sorry. For example, we're going to have going to trust. Okay, this one. So I just can, check the example from the book, right? Okay. So this is the cost of the seminar room. Okay. So what's included in here? The it will be include the direct cost. So probably around $20,000, and indirect cost. Um, there will be around $30,000. So what could be the total cost? The total cost in here is 60,000, right? Okay. So, for example, the seminar room have been used for 300 days, so in 1 year, but effectively used for 300 days. Sorry, yeah. Okay, so room 1 year will be 300 days. So how can we trust the cost of the seminar room per day? Okay, so cost of seminar room per day. So we can easily calculate it by dividing. So we got 60,000 total cost and 300. So now we can calculate it by dividing 60,000 divided by 300. So we got $200 per day. Okay, so that was um, the implementation. Oh, sorry, this is a room, right? Okay, so that was the implementation for the first one, the cost traceability. Okay, and the second one. Sorry, so the second one. What is the management target? So probably in order to, cost planning, yeah, for the cost planning and maybe profit planning. So the cost plan, profit planning. So what could be the cost classification in here? So the cost classification would be based on cost behavior. Okay, would be based on the cost behavior. So what is the classification of the cost based on the behavior cost? Okay, so the first one is variable cost. So second one is fixed cost. That one is semi-variable cost. Okay, so in terms of this cost of classification, we can easily use a formula in order to find the amount of the cost. So for example, we can direct it, for example, by using y it's so y in here is the total cost, okay, and a is a total fixed cost, and then B is the variable cost per unit, yeah. X is actually the output driver of the activities. Okay. Right. So what is the implementation for this part? So we can see the implementation actually on the income statement. Right. So for example, there is a so for example, there's a sales um, for the so the sales in the company is around 120. Okay, so the variable cost is could be 50,000, right? So the contribution margin. All right. So that was, that was the so the cost from in here. You can see that the contribution margin in here. Okay. It's how much is it? And after that, we do fixed costs, and after that we start with the fixed cost. Around 60,000. So we got operational margin. Okay, so that was just, you know, uh, the illustration. Okay, so at this part, if the sales was, a bit, so if the sales higher, so the profit will be higher too, right? So if the sales, you know, um, probably decrease, so the profit will be decreased too, right? So how about the fixed cost? The fixed costs never change, so the fixed cost still in there. So um, what is the item that could be, giving effect to the sales? Actually, the profit itself, right? Okay. So I'm just gonna check what just we can go. Okay, so I'm just gonna move to the next one. Now let's have a look. No. Okay, now let's have a look at the third one. So the classification. So first one is what is the management target, right? And so probably the next one, the management staff would like to report to the external. So for the external user, right? So they would like to report to the external user, or probably okay, yeah. So what could be the cost classification in here? So the cost classification. Okay, so the cost classification here, it's actually based on the what is the function of the cost itself. So the first one is product cost, production cost, or production cost. Okay, and the second one is marketing expenses, right? Marketing expenses, and the third one is administrative and general expenses. Okay. So what is a production cost? Costs that happen to the function of the production itself, right? So, for example, what is the production function in here? The meaning is, for example, we would like to, process the raw material, right, to the product like ready to use, right? So the next one is marketing expenses. So marketing expenses is the expenses that have been, actually happened in the marketing function, right? So this is kind of the function that happen in order to promote, in order to marketing product to the end of the customer, right? So the end of the user. So it's the customer. Okay. So out of that, things will classify it as the administrative and general expenses. Okay, so we can make the report for the external users based on the standard accounting standard. Okay, so what could be the implementation application here? Let's have a look. What could be? So, for example, start from the sales in the company will be around 120,000, and cost of goods sold, probably 55,000 here. So we got the gross margin. Margin is around 65,000. Oh dear, 65,000, right? And then we can, deduct with the operational expenses, right? So less marketing expenses, right? So probably marketing expenses will be around 25,000. Yeah. And then the administrative expenses in here. So around 45,000. Okay. So this is actually the total of operating expense, right? So things that we're doing here is So we got less operating expenses. Okay, so sorry, just make the space in here. Just gonna skip it. So how is it total? The total is so total operating expenses is 40. Sorry, I made a mistake. So it should be 20 here, 20,000. So the total became 45,000. Okay, so how about the income that we got in here? So income, income from operation. So we got it from 65,000 minus 45, right? So income from operation is 20,000, right? So we got from deducting this one and this one, okay? All right. So probably this is the last one, last type. So how about the management aim or proposal or target or whatever? It's focused to related to the cost efficiency. Cost efficiency. Okay. So what could be the cost classification? So the cost classification would be based on and depend on the value added cost. Yeah. So the value added cost, and the next one is the non-value added. Okay. So what is the meaning of value added cost? The value added cost is actually the cost that will be give the value to the customer. For example, like increasing the product quality, right? So for example, the on-time performance for the um, cargo express. Yeah. So, for example, they will be running the business on that line. So that was the value-added cost, things that customer got from the company, right? And so another thing is the non-value added. So the non-value added is actually, for example, we have, for example, the target is actually 100, but there are 30% of the product are defect, right? So the left 30% is actually the opportunity for us to decrease the cost, to minimize the cost, so in the amount 30%. So we can probably make the cost reduction program. Yeah. So management can focus on the 30% as a non-value added cost. Why is it happen? What sort of thing that we can do to tackle the problem, right? So that was for the non-value added. So how is the app implementation for this part? Okay. Okay. So we can show it on the income statement. Sorry. This part. So for example, the sales is 100, 120, right? So the cost, the value added cost could be 70,000. So the value added cost be 70,000. Okay. So how much the profit in here will be 50,000, right? But there is another things happen, so we have to deduct the non-value added costs in here. So it will be minimized and will be, like the amount of profit will be less, 30,000. So we got the operational income. Oh dear, I don't know what happened here. Probably it's stuck. Cannot move. I think. Just gonna add the next one in here, right? Sorry. So how much the total cost in here? So the total cost, it will be 100, right? But things that company have to focus is analyze what happened with the 30,000. So things that they have to fix it. So that was the explanation related to the cost classification, the cost concept. All right. So thank you for watching. Assalamualaikum warahmatullahi wabarakatuh.